Hello, everybody, and welcome to the monthly market memo ending June 2024. I'm Case Eichenberger, the Chief Investment Officer with RetirePath Advisors. We hope you all had a great Independence Day holiday and are having a great summer so far here in 2024. As a reminder, in these short videos, I like to walk through what's been driving the stock and bond market returns over the last few months, talk a little bit about the economy and what we've seen and what we may see going forward, as well as jump into any adjustments that were made to your portfolio, which we did have done in the month of June, towards the end of June, which you will see on your statements here. So without further ado, let's kind of continue on what we built upon last month, which was good news for the stock market. Stock market, looking at the S&P 500, had another great month, up over 3.5% for the month of June. Really was led by those large cap stocks in the S&P 500. In fact, if you looked at the small and mid caps and even some overseas companies, they really had more of a flat to negative return. But most of the market cap is in the S&P 500, and that is what drove the stock markets higher. In fact, it's up over 15% through the end of June on the year, which is just a fantastic return for the first 6 months. In fact, this is the best start to an election year on history for the S&P 500. Obviously, we do expect more volatility, as we just had the first debate and we near the election in November. So do expect volatility to come back, but so far it has been a very good start to the year, and something we definitely will take notice of here at RetirePath Advisors. Some of the news that was driving the stock and bond markets higher was inflation. Inflation was kind of a hard word for the last few years. Inflation has been very high. The good news is we've started to see it peak a couple years ago at 9%. Now we're back down to the middle 3% range. And in fact, the month of May, the inflation report came in below expectations, which was good for the stock market and the bond market to rally. Now, of course, we're still a little bit above the 2% target of the Federal Reserve, but this is encouraging and may lead to further rate cuts in the future. We do expect some rate cuts potentially to happen in September. Bonds had a good return. As I mentioned, stocks also did. Bonds were up close to 1% for the month of June alone, which did outpace cash. Economic data mostly good, but we've seen it be a little bit mixed, and that's something that we're watching carefully here at RetirePath Advisors. We did see a big increase in jobs created over the last month, which is always positive for those seeking jobs. But the unemployment rate also increased, which was over 4%. This does bear watching. If we do see unemployment start to increase month over month above 4%, the Federal Reserve will really take notice on that and may actually be prone to cut rates before what we expected at the end of this year, or potentially larger rate cuts. We really expect just a 25 basis point move, or 1/4 of 1%, but that could become a little larger if the unemployment rate does continue to move higher and the economy slows down a little bit. But so far, no drastic changes right there. It is something that we are watching very carefully. And finally, for this month's video, we did make some allocation changes within your portfolio at RetirePath. Of course, I'll preface this and always call your financial advisor with detailed questions. I'm always available here as the Chief Investment Officer as well. But in a nutshell, we did make portfolio adjustments at the end of June based on our asset class and proprietary macro outlook we have here at the firm. Trades are placed to further overweight U.S. stocks. We went from developed international stocks to U.S. stocks. We also added to our small cap positions marginally and increased growth stocks over value stocks. Finally, we did make some marginal adjustments to fixed income by reducing short duration in favor of core fixed income. Made a few fund changes you may see from one fund to another, which we believe will be advantageous going forward, and really just rebalance your portfolios as well to make sure your asset mix is consistent with your long-term goals. So you'll see those on your statement. Those trades are proactively done by us based on the council and the firm's view of where markets will be heading in the future. Again, thank you for watching this video. I do appreciate you taking the time out of your busy summer. I hope you're having a good summer. And we always approach the management of your complete financial landscape very seriously here at RetirePath. As a trusted steward, advocate, and confidant, we are committed completely to you, the client. Always stay connected. You can look at us on our website at retirepathadvisors.com, call our home office number, or send us an email. And those are the general lines. You always have your personal financial advisor available as well. Thanks again. Hope you have a great summer. Bye, everybody.